Okay, my mind is blown. I guess it's time for Hype Mania again. Microsoft just announced $2.27 per share in earnings, missing their estimate of $2.31. They reported $52.7 billion in revenue, missing $52.94. After hours, they're up almost 5%. This feels like 2020 and 21 again, where people miss and the stock skyrockets. Now, maybe in the last 6 minutes since they reported, and they reported 2 minutes ago, there was some announcement of some great news, or maybe the market assumed they were going to miss and beat them up, but they were only down 54 cents earlier today. Guys, our software is accurate. This is the accurate after hours number. Okay, it's creeping up towards 5%. I don't understand this. This absolutely blows my mind. And guess what? The same will happen on the flip side eventually, where people are going to beat their earnings and revenue and stocks are going to go down because people are going to say stocks suck. But we're here looking at Microsoft, a company that just announced missing on earnings and revenue. And they're up not a little bit, not even, they're up 4.8% after hours. Based on their market cap of $1.76 trillion, that's $80 billion in market cap added, give or take. Let's see if there's a press release out yet. Let's see if the press release is out yet. Q2, here we go. Go. Let's see. Okay, so revenue increased 2%. And guys, Microsoft's a big company. 2%, it's going to go more than that, but that's not huge. Operating income was $20.4 billion and in GAAP and $21.6 billion non-GAAP, decrease of 8% and 3% respectively. Net income was $16.4 billion GAAP, a decrease of 12%, and $17.4 billion non-GAAP, 7% decrease. Guys, look at these decrease words right here. Look at this. I don't understand this. Oh, let's see. We're focused on operational excellence. We continue blah, 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 blah. Blah, 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 blah. I'm just flabbergasted. Revenue and productivity and business processes was $17 billion, increase of 7%. Office commercial products increased. Consumer products, LinkedIn revenue increased 10%. Good for you, LinkedIn. More stories about how you hired the person who was skipping work, and because you found out you did your job by interviewing them and talking to them and saying, come to my office, what's going on? They told you how they lost their leg earlier that day in a landmine accident, but they still decided to show up to work because work's the most important thing to them, and whatever other garbage story they gave on LinkedIn. This is why I'm not on LinkedIn anymore, because I used to see these stories and write BS or just say, this story sounds made up. It used to get a lot of laughs from people who followed me, but other than that, what was that? Yeah, Tim just said I miss LinkedIn Paul. Everybody say, guys, I don't understand this. It really baffles my mind. So let's go check out Microsoft overall. And if you're new, I want you to know, we do a lot of earnings reactions. Now, you got to remember, as a value investor, I don't buy or sell based on earnings. I couldn't care less their earnings. I'm more interested in what are they announcing through earnings. What's their news? Are things getting better? Are things getting worse? Fundamentally in the business, we're going to have cycles. If they say they see a slowdown, I don't care. Unless the slowdown is something secular in the business that I have to worry about. So I still pay attention, but I only use Microsoft. I only use these earnings results, hopefully when the stock falls, and it falls to an egregious level because people always overreact to things. I don't get this. This is still up 4.5%. Now, we've done earnings reactions on other videos. And like Netflix, we did last week, was it? We did Netflix last week. And in that time frame, it was up 6%, even. It was all over the board. So these things do happen. But if you like these earnings releases, you've got to subscribe because we do them a lot. We're getting into a busy week for earnings. Everyone loves them. In our community, it's one of the most common things. Paul, are you going to react to this earnings, et cetera? People love seeing them. And it's a good way to learn about companies. So, well, look at this. The max chart on Microsoft, 108,000% increase. Go check out the 8 pillars. Our typical loving 8 pillar. All 6 checks except for valuation, 5-year PE and 5-year price of free cash flow. So the question is, are they selling for a reasonable price? Are these okay price to free cash flows and PEs? They're high, but we have a really high 5-year return on invested capital of 25.3%. And last year, pretty consistent. You should want to pay a higher premium for a higher return on invested capital. However, don't overpay. The question is, what is overpaying? That's the hard part. That's the art of investing. Everyone's going to look at every company differently. Warren Buffett, Charlie Munger, partners at Berkshire Hathaway, they've said before that if you ask each of them individually, what's Berkshire worth? They would both give different numbers. Now, my guess is they'll probably be reasonably close, but they're going to give different numbers nonetheless. The point is the process, all right? So, a couple other things on Microsoft that I like. Market cap, enterprise value. The difference here of 1.76 trillion to 1.93 trillion is basically the net debt on hand. And that's about, what is that, $120 billion. And they generated $63 billion in the last 12 months. So it's about 2 years of free cash flow, which is awesome. And that's what we see right here. 2 years of free cash flow is their debt level. All right, pretty good. Sounds pretty good. Look at this 5-year revenue growth, $88 billion. Jesus Christ. Gross margin, 68%. What was the company we did earlier today? Adobe. Adobe is amazing. They have an 88% gross margin. Microsoft's still very solid at 68%. What is gross margin? Gross margin is for every unit you sell extra, what percentage of that unit's revenue goes to profit to pay before your income taxes and before your overhead? 68%. So if they sell $100 worth of product extra, they get $68 there to go pay for their overhead and their income taxes. And their bottom line margin, 30 to 35%. All right. What are analysts saying about Microsoft? Okay, now it's falling a little bit. You see this, guys? It's currently only up 3.7%. All right, maybe they're talking now. Maybe they're starting to say things. Guys, it wouldn't be unheard of to see this company go to the negative at some point. They come in the conference call. They say things like, it just turns out that there's a fraud going on. I'm not saying that's happening, but the whole point is they could say anything in the call and all of a sudden the stock can plummet because people don't like it and people are irrational. So for this fiscal year, they're expecting $9.74 in earnings per share, according to analysts. And that's set to almost double over the next 4 years. All right, that's pretty solid. Look at this. Pretty big growth. So for a company that isn't going to grow, actually the revenue growth is pretty decent. Looking at revenue growth of 85 billion over the next, so that's, what is that, 2.5, so 40% growth over the next 4 or 5 years. Is that 40%? Yeah, something like that. 40% growth over the next 4 or 5 years, but almost doubling the EPS. Thank you, gross margin. Thank you, return on invested capital, things like that. Those are good things there. So, what do you pay for Microsoft? That's the question we have to ask. This is our stock analyzer tool. We have used it's been used 1.3 million times just in 2022. In the last year, our users used it over 1.3 million times. If you're interested in the software is awesome. Go to everythingmoney.com. It'll help you. The community will help you embrace. You won't have the fear anymore when stocks go down. You won't have the fear anymore when you see your account go down. You're actually going to get excited. People in this community will sit there and go, we were talking about Google today. Google's getting sued by the Department of Justice. The number of people saying, this is awesome. Their stock's going to fall. We're going to be able to buy shares. Imagine a world in which you could live, in which you are excited for lower markets. That's what you get here. Less than a cup of coffee per day, everythingmoney.com. But let's see what Microsoft is worth according to our stock analyzer tool, not including the balance sheet. So I want to own Microsoft for a very long time. I'm going to do our maximum 20-year analysis here. Low side, I'm going to do 4% revenue growth, 7% in the middle, 10% high. Because over long periods, a lot of people would argue that 7% growth is about what companies should grow when it comes to inflation and the world population getting more and more wealthy, et cetera, especially for a company like Microsoft that can sell more and more to developing countries. Okay, that's a big thing for them. Profit margin. Now, profit margin was 28% in the last 10 years, 32% in the last 5, and 34%. So it's getting better as time goes on, right? but I still want to be conservative. I'm going to go with 30, 33, and 36. Let's say they crush it and they do 36%. Free cash flow margin. I'm actually going to do 28, 30, and 32. So a little bit lower, even though over long periods of time, they should be the same. And you saw that in their earning PE and their price of free cash flow over the last 5 years. They were very similar. And look right here. This is why they were very similar, because their ratios were exactly the same, almost. Now, PE. Guys, PE, you should pay more for a growing company and a high return on invested capital. We want a 5-year return on invested capital of 9%. This company has a 25% return on invested capital over the last 5 years. That's an incredible, incredible number. You should pay more for it. The growth isn't necessarily there, but the EPS growth is there. The earnings per share will grow. So the question is, what PE? I think the low side, 15, middle side, 16.5, high side, 18. And the same for the price of free cash flow. Guys, all of these numbers I want you to remember are all me spitting it out. You can put whatever numbers you want in here. I'm just throwing something out there. People in our community will always disagree with me. There are thousands of people in here who've done hundreds and hundreds of these stock analyzer tools, and they come up with different numbers than me all the time. Sometimes they'll take a screenshot and send it to me, and I'll say, what are you doing? Other times they'll look at me and say, Paul, what the heck are you doing? And it works out great. We have a discussion about these things. That is the art of investing. You've got to be ready for that. So finally, desired annual return. You can get 9 or 10% by investing in a long-term ETF. So in order to buy an individual company and to have some margin of safety, you need a higher return. The more return you want, the lower the price, right? Because the less you pay for something, the more return you get. The more you pay for something, the less return you get. So I've been pretty conservative here. So one could make the argument of, hey, maybe I put 10% in here. If I could buy Microsoft, assuming these, but I tend to try to go a little bit better. So I'm going to go 12, 13 and a half, 12, 14, and 16, because I think these numbers are very, very high. The chances over 20 years of them doing these numbers are very, very slim. So I got to put a very big margin of safety here. So I'm going to hit the analyze button. Now keep in mind, 6 numbers are going to pop up. Low, middle, and high for earnings, low, middle, and high for free cash flow. It's to give you an idea of where you want to be. If it's all green, doesn't mean go out and buy. Go do your research. All the more reason to go everythingmoney.com, because I guarantee you a lot of people in there have talked about Microsoft, and you can actually search in the chat for exactly where they talk about Microsoft and go engage in that conversation. This is very useful. Go do more research. Go talk to people. Do unbiased research to make sure you're right, okay? And if it's not all green, the good news is add it to your watch list on our software, and the software will email you, send you a notification on the app and on the website when the stock hits that price. So we hit the analyze button. Boom. All right. We have a low price about 100 to 110, high price of 160 to 180, middle price of 130 to 140. I have it on my watch list at 160. This does not mean I'm buying it at 160. I'm actually going to look forward to sell puts on it. And actually, I don't know. I might increase that. I have no idea because the return on invested capital is so high. I want to see some big momentum down on Microsoft so that the puts, I can sell options in order to get the stock, be paid to wait to get the stock at the price I want. And if this is something that sounds interesting to you, you've probably never heard about it, but you can figure out a way to sell options, sell puts to get paid to wait for Microsoft to hit the price you want it to hit. Thanks very much, guys. If this is all interesting to you, I need you to do 2 things for me. 1, subscribe to the channel, and 2, share this video with somebody else who might be talking about Microsoft and want to learn the real value way to learn about investing. The more you learn, the less you fear. Thank you very much for your time.